Good day, everyone, and welcome to today's market fundamental and technical breakdown. My name is Anthony Phillips Njoku, and I'm the founder of 10x Digital Lane, where everyone who has a knowledge gap in digital trading can be able to learn the right strategy, the right approach, get the right softwares, the right one-on-one mentorship to be able to achieve success in making money in the financial market. So today we will be going through the market fundamental, technical, sentimental breakdown for the time period of 4th to 8th of March 2024. Okay, so if this is your first time, smash that like button, comment any questions or your feedback, because I'll be dropping a lot of opportunities. I'm dishing out a lot of information. I'm dishing out a lot of opportunities. Watch to the end. Watch to the end, because this is opportunity that you can take action on and be able to make money in the financial market. So with that said, I'll be watching out for the comment section. If you have any questions, I'll be answering your questions on the comment section, and I'll also be reading each and every comment that comes in and be replying. Please try as much as possible to like, okay, and subscribe and comment Forex, so that the YouTube algorithm will share this video with other Forex traders among your community, because it's an algorithm. So just try as much as possible to comment Forex, so that others will be able to, this video will be able to reach to other people. So with that said, let me share my screen now and we dive into this money making opportunity. Okay, so currently we are looking at DXY, the strength of the dollar. DXY tracks the strength of the dollar. Okay, just like S&P 500 tracks the strength of the top 500 company in the United States of America, DXY tracks the strength. So DXY came from this word resistance, or we as well call it supply. It had what? A swing low, a swing high, swing low, swing high, swing low. It is presently creating what? Bearish structure, creating lower lows and lower highs. Okay, so in such situation, when the market is creating bearish structure, we go for sales. So first of all, you need to identify the structure the market is currently giving to you. So at this current level, the market broke what? A previous swing low, lower low. This was lower high, lower low. The market came and created what? Another lower high and broke this what? Lower low. But this current lower low has not been broken. So there is liquidity lying here, and we're expecting the market to come and break this lower low very soon. That is why we marked out this resistance level that resisted the market from going higher to and broke this low. That's why we marked out this resistance level. So the market has touched this resistance level 1, 2, 3, 4 times. Okay, so from this point now, we're expecting the market to come back into this resistance level, a little corrective structure into the resistance level and drop. Okay, it's going to break this low. So if you go in for your sales here, for those who are currently in on your sales, you can take your first profit bag here. This is guaranteed, because this is the current lower low that the market is eyeing to break below further. Then when the market breaks that, we'll be aiming for this support level and resistance, support level or demand level. You can call it support level or demand level. Why did we identify this demand level? It's because the market broke this high when it was creating bullish structure, swing highs and swing lows. This is a swing low, swing high, swing low, swing high, until structure changed, okay, for a bearish structure. So this was the last high the market broke, and this was what? A swing low of that high. That is why we're eyeing here as our demand level. So that's what I see for DXY currently. So next pair is Euro USD. You already should know this by now if you're familiar with our market fundamental and technical breakdown, that we say that DXY is highly correlated with euro. If DXY is going down, euro USD should be going up. Inverse, it is the inverse. Okay, with that ideology, it is already was simplified for you that we're expecting what euro USD to go to the upside, corrective structure into this demand level, and then to the upside. That's why I took my time to explain DXY for you. Let's look out for sentiment. Let's see what other traders think. I think euro will buy. What does other traders think? So this is sentiment. Sentiment has to do, this is for the beginners. Forex sentiment is the feeling of market participants towards a currency pair. It is an essential aspect of forex trading as it plays a crucial role in determining the direction of the market. So with that said, this is euro USD sentiment. Okay, so euro USD, this bar needs to load up. They need to show us a percentage. Let me refresh this page. Let me refresh the page. We need to load up the percentage. Let's see the percentage of sellers and the percentage of buyers. Okay, so it's loading now. The page is loading. Okay, adverts. Okay, the percentage is out. So we have shorts 58%, longs 42%. With this in mind now, sentiment is saying 58% short, 42% long. When the market opens up, don't start buying. One rule is, because I said that euro USD will go up. When market opens up, people start entering buy. No. Based on sentiment, I expect this market to have a corrective structure. Okay, a smaller corrective structure based on what I've seen now on sentiment. This is where the market is and it closed here. We're having a corrective structure towards this what support level, and from here we'll be moving to this what this resistance level. But if sentiment turns out to be much stronger, we can expect what a corrective structure towards this level, taking out liquidity below this low, below this low, and below this low. But one thing I see that is possible to happen is that because euro USD created a double bottom here, which is more like a W formation, okay, there is going to be a slight corrective structure when the market opens up Monday. The market is going to have a slight corrective structure based on sentiment. There will be sales, okay, but the overall view within the week, before the week runs out, like I told you, this is the market fundamental breakdown for 4th to 8th of March. So we're seeing this push to the upside before the week runs out. Okay, my major aim is to be watching out for the push to the upside. I'm looking for my buy setups at this what support level, or at this support level, because we have other blocks here that has not fulfilled some efficiency yet. So the next on the list is gold. God's money. Woo! Gold spiked up massively on Thursday and on Friday. I made quite some profit on gold. So currently on gold, what do we see? Last week forecast was we anticipated. The last week forecast is we anticipated that gold will move to the upside and come back a bit before it starts pushing up. Okay, this was Sunday. So we anticipated that gold will move to the downside, a corrective structure, and then start pushing up, and that's what we got. But the zone where we anticipated that gold comes into was this was bullish or demand level, this support level or demand level. But gold never came into that level. It used a fair value gap. I went lower. It used a fair value gap and also Fibonacci retracement point of 61.8 to determine its support level, and the market started to buy. On Thursday, there was a massive buy. On Friday, before the weekend, there was a rally. Okay, so currently now, I've spotted what? A supply level. The supply level that the market has what been to before. Okay, and from this supply level, I can be anticipating what? Sell-offs from gold, okay? for those who bought from below here, they might be selling off at this point to take what profits or to bag their initial investment. One thing about investing is that when you invest and you make returns, your first target is to take your initial investment out. Once the initial investment is out, then you're looking out for what? Free money, to make more money from the free money the market has already given to you. So this is what I see now. From here, we'll be anticipating what? Psychological sell-offs. When the market moves to the upside, a little push to the upside to grab liquidity, and then I'll be looking out for what? The sell structures for gold. But we'll be looking out carefully for the sell structures, and when we get the signals, we'll be sending it in our Telegram channel. The link to the Telegram channel will be on the description. Let's see what sentiment says. Let's see what other traders think about our idea. XAUUSD. Let's search for XAUUSD. XAUUSD. Sentiment 81% short, long 19%, accurate like I anticipated. 81% short and 19% long. So, like I told you, we are currently inside what? A supply level. It is a resistance. Basic terminologies, resistance. People call it resistance. We are in a ceiling. When you throw a ball at a ceiling, what does it do? It bounces on that ceiling and comes back down. Okay, so currently the market is in a ceiling and we're expecting it to come back down. We're looking for our sell structures, and when we see a guaranteed sell structure, we'll be taking the trade and we're calling the signals for you guys. The next on the list is AUD USD. AUD USD. Okay. AUD USD is a bit complex. It has uncompleted structures, but I'll try to break it down in a simplified way. It's loading. Okay, so for AUD/USD, we got an opportunity when the market sold off, because when the week started, we told you that the market is going to sell off. Okay, so this sell-off happened on AUD/USD, coming back into this demand zone, and we saw what? We saw an order block that the market has not fulfilled. So we got what? The push to the upside, and there is what? A resistance zone over here. So we're anticipating as soon as the market opens up, there will be a little corrective structure in AUD/USD, or a deeper corrective structure into this there is a particular order block here that has not fulfilled efficiency yet, which is a demand zone, which is a support, okay, for more buys. So for AUD/USD, we're anticipating what? A corrective structure once more to the downside, and then a continuation push to the upside. Okay. Then when we get signals, we'll be sending that signals for you guys. But you can see the AUD/USD closing higher than expected on Wednesday. So we'll be anticipating for that. Okay, sorry, Thursday I mean. So we'll be anticipating for what? A corrective structure, either a small corrective structure inside this demand level, or a bigger corrective structure into this demand level below here. I mean this demand level below here. Either a small corrective structure into this demand level here, or a bigger corrective structure into the demand level for more buys. Because we're anticipating DXY to do what? To go to the downside. And if we're anticipating DXY to go to the downside, AUD is what? Is paired with USD. Okay, so if DXY, which is the strength of dollar, is meant to go to the downside, this means that AUD/USD is meant to go to the upside, because AUD is on the base currency. So the next is what? GBP/USD. GBP/USD. Okay. But before GBP/USD, let's check out sentiment for AUD/USD. AUD/USD sentiment. Okay, this is sentiment for AUD/USD. You can see we have 33% short and 67% long. 33% short and 67% long for AUD/USD. So our bias for the buy is accurate for AUD/USD. Then the next is GBP/USD. For GBP USD, we have the same bias for a long for GBP USD. Okay, so as soon as the week opens up, we're anticipating what a little corrective structure into this demand level, this last red candle. Then before we push to the upside, which is this resistance level, okay, or we can have a deeper corrective structure into this demand level that the market has not fulfilled its efficiency yet. There is liquidity lying here. There are others, billions and trillions of dollars lying here. So if the market comes back to this level, will be what getting our buy setups and what's going for the long push to the upside. So that's what I see for GBP/USD. Let's see what sentiment says about that. GBP/USD. So on sentiment, we see that short is 62%, long is 38%. Like I told you, due to sentiment, short is 62%, long is 38%. The same bias I have for Euro USD. Either we get a deeper corrective structure for more push to the upside, or what a light corrective structure for more push to the upside. Meanwhile, for AUD USD, the case is quite different because sentiment has buy pressure. The sentiment has more buy confidence. So that's what I see currently for GBP/USD. A deeper corrective structure, a push to the upside, or a slight corrective structure, a push to the upside. We're watching out the market structure, and when the trade is in play, we will keep you guys updated in the group chat. The next and the last on the list is Bitcoin. Bitcoin is the next and the last on the technical breakdown. So for Bitcoin, we analyze that the market was meant to push to the downside. You can see over here we anticipated that there will be a push to the downside, and then this is more like a corrective structure for Bitcoin, and then the continuation push to the upside, which we can see Bitcoin broke this bullish flag. As soon as this bullish flag was broken, Bitcoin started rallying to the upside towards our psychological level was 57,000. So this bias currently is not relevant anymore. The current bias is going to be on the daily time frame. On the daily time frame, we see what Bitcoin broke this particular daily resistance zone, okay, and psychological level of 57,000. Bitcoin broke it. Okay, it was not resisted by this zone. So what I expect is a corrective structure back to this zone and then push to the upside to the all-time high price of $69,000. 69,000. But there will be a corrective structure into this zone, the 57,000. Okay, 57,000, 58,000, 59,000 zone. Then before we have a push to the upside towards the all-time high of $69,000. We just have 11.30% to get to the all-time high from the current level where Bitcoin is at this point of this broadcast. Okay, 11.30%. Think about it. We called out Bitcoin buys from this low. I remember I called out this signal from this low from 38,500. And if you had bought from 38,500, you would have made 60% of your money. If you have put in $1 million, you'd have made $600,000 just by holding Bitcoin from our trade signal here. And now we're telling you that we have 11% move to the upside for Bitcoin from the current level. 11.3% move to the upside to the all-time high price. Okay, 11.3%. So don't sleep on that opportunity. Take action and utilize this information. So with that said, we'll be diving into the next part of things. But before we dive into the fundamentals, I'd like to share with you guys a very serious opportunity. Okay, so currently we are offering account management services with copy trading on HFM. Okay, we're offering account management services with copy trading on HFM. And you can see currently on my screen, this is the HFM broker we use. Okay, and this is the trader area. This is the time we created the copy trading account. It was created on 18th of February 2024. And this is my account number for my MT4. Okay. So now you can connect to our copy trading. The link is going to be on the description to attach your account to our copy trading. You just need to register with our broker HFM. After you register with our broker HFM, you fund this broker. Okay. You register and verify. you fund your broker account, okay, with minimum of $25. You can see a minimum first deposit is $25 over here on the stream. First deposit $25 minimum, and then you can copy my trades, okay, instantly. You can copy my trade, which means that if I am placing a buy, you get a buy. If I'm in profit, you're in profit. If I'm placing a sell, you get a sell. If I'm in profit, you'll be in profit. If I'm in loss, you'll be in loss. Okay. So currently, this is our performance. We have gained 7.01% of our account since this account was created on the 18th. 7.01%. Okay, and it is even less than a month. We have not completed 1 month. We have made 7% of our account. Think about it, that we're able to make month in, month out 10% back to back to back. And currently, our maximum drawdown is just 1.5%. That's our maximum drawdown. Okay. The leverage on this account is 1:500. The performance fee is 45% of the profit you make. So if we make profit, you take what? You take 55%, you keep 45%. Our risk score is currently at 1. We are ranked 1 in our risk because we apply proper risk and money management. To be honest with you, me, the trader that is managing this account, I'm not managing it for massive profits. I'm not managing it for massive gains. I'm managing this account for building a portfolio, building a track record. It is two different things. To make quick money and to make steady money is two different things. I want to be able to stand out and say, I have been with HFM since 2019. What is your track record of being a trader? I have track record outside HFM. I want to have a track record inside HFM. I've been with HFM since 2019. When I meet a fellow trader and you'll be like, what's your track record? Show us your track record. I'll be able to show them. Go to HFM. You see my track record since 18th of February 2024 till whenever. You see what I've been able to do with this account, the withdrawal I've been able to make on this account. So currently we have 3 followers and it will be growing week in, week out, week in, week out. Currently we're not offering account management services because our buckets are filled. So I'm offering this opportunity to those who want to still earn in dollar and what? Copy my trades. This is how the trade has been so far. Okay, this is how the trade has been so far. You can see when we started the account, I didn't place much trades then. I waited, I gave the account some time, some breathing time before we moved and shoot to the upside. So we'll keep shooting this way. We'll keep making profit this way for those who connect to our account. So with that said, let's dive into the fundamental analysis. So for fundamental, we have Monday, March 4th, 2024. Starting the week with CHF, CPI. Very, very interesting and important news, which is likely going to give CHF strength. This is happening by 8:30 a.m. And what is the result of this news? Currently, we have consensus 106.9 against 106.4. With this consensus against previous, CHF is automatically strong. Okay, so we're going to be looking at 8:30 Monday to see what the actual news is going to be. If the actual news is higher than 106.9, more strength for CHF, more strength for risky assets. So CHF, if we get a lower figure than 106.9, then we will see weakness on CHF. Okay. Then 9 a.m. in the morning, unemployment changes. It has to do with those who have been unemployed. Okay, so if we see a figure lower than -5k, it is good for euro. But if you see a figure higher than -5k, it's going to be bad for euro. Likely, the previous data was 60.4k. Consensus is -5k. And Spain, to be precise, we don't have any data about inflation or recession. So this data could be outperformed, and then we can see euro gain some strength. This is just mere saying. I'm mere saying. But when the data is out by 9, okay, we can confirm. So don't just, when the market starts up, because I say CHF is strong, you can start buying CHF. No, that's not what I said though. So you need to give yourself a particular strategy to be able to place trades and make profit in the market. So I want you to watch out to the end. So I will share with you the way and the right approach and strategy you can use to make money from this market. Then 11 p.m. West African time on Wednesday, we have Australian dollar Judo Bank Service PMI. Okay, if the figure is higher than 52.8, it is good for Australian dollar. This could be our trigger for Australian dollar buys. Okay, this could be the trigger we needed, because sentiment has already told us that a lot of traders, 63% of traders in the whole world trading AUD is buying AUD against the dollar. So this could be our trigger for the buys we need and the liquidity we need to push the AUD USD to the direction we want it to go to. Then on Tuesday, London's Asian session, we have GBP BRC retail sales monitor year over year. This is not really a very, very, very high impact news based on my own studies. But London session, we have service PMI for Spain, service PMI for Italy, service PMI for France, service PMI for Germany, and service PMI for Eurocentral. So in that case, we will be seeing a lot of liquidity between 9:15 to 10 o'clock for the euro pair. Okay, so service PMI, if we have a figure higher than 53.3, it is good for euro. So based on what I see currently, this is higher than the previous, good for euro. This is higher than the previous, good for euro. This is higher than the previous, it is extremely good for euro. This is higher than the previous, excellent for euro. And this is higher than the previous, super for euro. So currently, based on the consensus against the previous, euro is strong for Tuesday. But when the news is out by 9:15 on Tuesday, we can now confirm this trend to continue or this trend to diminish. Then on Tuesday as well, London session, we have service PMI for Great Britain. The same service PMI we have for euro, Great Britain will be announcing theirs as well. So currently, this is what exactly as previous. So we don't have any, it's neutral for GBP. We will more focus on euro on Tuesday morning. Okay. Then on New York session, we have by 3:30 Canadian Global Service PMI and the United States Global Service PMI and ISM Service PMI. So we'll more focus on this US service PMI. And based on what I'm seeing here, we have 51.3, which is lower than 52.5, and 53, which is lower than 53.4. So based on this, based on what I'm seeing, consensus against previous, the risky assets euro is what in advantage based on the service PMI forecast. But for the dollar is in a little disadvantage based on their forecast. So Tuesday, I'll be watching out for euro and then confirming my buys for euro against the dollar when the news actually drops between 9:15 to 10 o'clock in the morning. Then New York session, we're watching out for this data. If we get a data lower than 51.3, extremely good. If we get a data better than 53, perfect, because we're anticipating dollar to lose strength. Structure is telling us that dollar will lose strength, and this could be the news to trigger the loss of strength for dollar. Then on Wednesday, we have AUD GBP growth rate, exactly as previous. Then we have retail sales month over month higher than the previous, which is good for AUD. Then London session, balance of trade, which has to do with the total import and minus the total export of goods within euro to specific Germany. So we have 21.5 billion, which is lower than 22.4 billion, which is bad for euro. We need this figure to be higher than 21.5 billion on Wednesday to give euro more liquidity to go to the upside. Okay, then we have retail sales year over year and retail sales month over month for euro, which is a high impact news as well, which is going to affect the market. Minus 0.3 is higher than minus 0.8, which is good for euro, and 0.1 is higher than minus 1.1. We can see retail sales could be a positive factor for euro heading into Wednesday. So the next is on dollar New York session, ADP employment changes, which has to do with the private sector employment changes, those who gained work and those who are not employed. So currently we saw 150K got employed and the previous is 104. This is consensus though. When we get the actual figure, if the actual figure is higher than 150K, it is going to be strength for dollar. Okay, so to wrap up Wednesday, we have job openings. Okay, job openings for the private sector. Okay, and if the figure is higher than 8.895 million, it is good for the dollar. Then on Thursday, we have balance of trade, which has to do with the import and export of goods and services within Australia. Currently, we have 11.5 billion Australian dollar against 10.959 billion Australian dollar, which is extremely good for the Australia. Every data I'm seeing here currently is pointing to the bullish bias of Australian buy sentiment we saw earlier. Then CHF unemployment rate, London session, deposit facility rate for euro, interest rate decision. Wow, Thursday is hot for euro. Interest rate decision. So we're watching out for that interest rate decision. Currently, we have 4.5%. 4.5% previously, and consensus is 4.5%. If we get actual to be 4.5%, we can see some massive rally on the euro pairs. Then we have continuous jobless claims, initial jobless claims, and jobless claims 4-week average. We are more focused on the initial jobless claims data. So if we have a higher than 217k result, it is going to be bad for the dollar. To end the week on Friday, we have employment changes quarter over quarter for euro, employment changes year over year for euro, which has little to no impact, but based on the data, it can be driving the market for that day. 0.3% against 0.2% employment changes. Those who got employed based on percentage, 0.3 is higher than 0.2%, which is good for euro. Then we saw employment changes year over year, the same as the previous, okay? Unemployment rate for Canadian, employment changes for Canadian, we're not more focused on that. And to end the week, one of my favorite news events is the non-farm payroll, okay? Non-farm payroll for February, okay? So we're watching out for non-farm payroll. This is the major one. We have 200k against 353k. This is lower than 353k. If we have a figure higher than 200k, it's going to give massive strength to the dollar. Every other one, like U6 unemployment rate, and non-farm payroll private is a derivative of non-farm payroll. Okay, so we're more focused on this non-farm payroll. Okay, if we have a figure like 250k, it is good for the dollar. If we have a figure like 300k, it is good for the dollar. Based on structure, we'll be able to anticipate what the market will do next. But I'll be watching out to trade live on Friday, non-farm payroll with you guys. Then the week, Thursday, we see what New York session, euro interest rate decision, massive volume for euro. And then Tuesday and Wednesday, we'll just be watching out closely for the euro pairs. Based on what I can see, euro pairs and AUD pairs has a lot of high impact, promising market moving indicators. So to wrap this up right now, you guys might be wondering, which strategy do I use? How do I enter the market? How do I place my trades? Before that, I want to show you guys that we have a little upgrade on our website. You can dive down to 10x Digital Lane right now, okay? We have an upgrade. We upgraded the website. You just go down to our website, log in. 10x is 10x digitallane.com, okay? Once you log into that website on Chrome, if you're new, you want to just learn the basics of building the right trading mindset, be able to start your business as a trader, you can go to the free area and click on what? Sign up. But if you're someone that wants to invest in yourself, invest in your future, invest in reaping the benefits of learning how to trade this market the right way, get the one-on-one guidance from us, get the right softwares, get trusted partnership and trusted brokerage resources, get the right news, get the right signals, you can go for the monthly package, which is $49 per month. The 3 months package is $139.65. The 6 months is $264.6, and the 1 year is $470.04. All this has discounts applied already. You can see the 1 year has 20% discount applied already. So you don't really need to come and start asking me for more discounts. The only one that doesn't have a discount is the 1 month. It doesn't have any discount because it is the basic, it is the minimum. Okay, so for those who want to test the interface, how our platform works, you can go and sign up. We have the free package, we have free content that's inside the website. Okay, and I got a lot of complaints from a lot of students that when they go to our website, they find it difficult to sign up. They find it difficult to sign up, that they don't know what this zip code is, they don't know how to find the zip code with Google. Okay, we decided to fill in sign up button with Google. You can sign up with Google. You just click on I'm not a robot, complete the authentication. You don't need to fill this form anymore. You don't need to fill this form, okay? But this form will be required that you fill it inside the dashboard on your account when you have completed your sign up with Google. You can just click on one click. All you need is one click. Attach your Google account, okay? Sign up with Google. It brings out the option for you to click on the actual Google account you want to use to sign up. And when you have selected the Google account you want to sign up with, it gives you instant access into the dashboard and you can start learning how to trade. As you can see right now, I clicked on that button and it has asked me to select the Google account I would like to sign up with. Okay, as soon as you click on this Google account, you'll be moved to your dashboard and you can start learning the basic free content inside our dashboard. Today, we want to impact you today. Take the action, okay? This could be the action you needed to take to push your life to a whole new level in 2024. Don't delay. Don't procrastinate. Thank you so much for watching to this point. If you have any questions, drop it on the comment section. If you have any inquiries, you can schedule a meeting with me and I will be able to guide you one-on-one to be able to achieve success in this business. I hope that everyone gets a profitable trading week. I'll be dropping signals. I promise I'll be keeping you guys updated with the signals, accurate signals, and I'll be following you guys based on the stop loss. I'm following you guys based on the take profits. I'm following you guys based on the taking of partials, doing the break even, and so on and so forth. Okay, I'll try as much as possible to make it as simple and easy for you guys, because our passion is leadership and financial freedom. What makes me happy is to see the transformation in the lives of the people in the world when they become less bothered about money and live the life that they love. Peace.